All right, we had the boss at JetBlue on Tuesday, Dave Barger. He professed his love for the show. We just talked to Marc Faber, but you know who else who wanted to get into the Futures action now? Futures Now action? It was legendary investor Jim Rogers. He is calling in from Milan, Italy. He joins us on the Futures phone. Welcome, Jim. I'd love to be in Milan myself right now.
Well, I wish you were here then, Jackie. It's easy. Jump on a
next
plane.
time. Maybe next time. All right, Jim, want to talk about the overall markets here. At this point, where are you looking right now for value and why?
Oh, I don't really see much value in stocks anywhere at the moment. I mainly own currencies and I own some commodities. I'm short stocks in various parts of the world. I've been listening to your show, and obviously your traders are much, much faster and better than I am. I'm not short-term at all.
I don't know about that.
I'm a simple person. I'm not. You're too fast and too short-term for me.
All right. Well, in terms of the commodities, then, what are you looking at?
Well, I'm not looking at anything. I'm sitting and watching.
You're watching. All right.
I'm mainly long. I'm long commodity. I'm long all commodities, but I'm long more agriculture than anything. Agriculture and precious metals. But I don't think I'd buy any of them right now. I'm long some currencies. I actually own the U.S. dollar, although it's long term, it's a disaster. But I own it because people don't know what else to do, so they're rushing into the dollar.
Mr. Rogers, it's Rich Elchishin at the CME Group in Chicago. Big fan. And in case you didn't know, Mr. Rogers had a book 10, 15 years ago, Hot Commodities, that changed a lot of investors' opinions. Great stuff there. Let me ask you about the grains specifically. As I'm calling in here from the CME Group, the grains were the biggest gainer of the year. We'll talk about soybeans and corn and all these different markets because of the weather concerns. Do you think we have another year left in that big cycle? And does it concern you if there's a changing of the guard in the White House concerning the dollar? So in other words, are you positioning yourself still net long grains going into 2013?
Well, you're asking me. You're sitting on the floor of the CME, and you're asking me, Rich. I should be asking you, for goodness sake. I mean,
Jim Rogers, you're on fire today.
I should listen to this show and find out what's going on in the world. What do I know? I own the grains, the metal. The agriculture. They've been very, very hot, as you know better than I do, and it's something that's been that hot should correct for a while. Doesn't mean it will, but it should. But no, the agriculture's done nothing for 10, 20, 30 years. It's been a disaster, agriculture as a whole. So agriculture is going to be an extremely exciting part of the market over the next 10 years or so. Probably the best profession we could all become. We should all become farmers. Because if I'm right, the price of agricultural products is going to skyrocket. If I told you how high it's going to go, Rich, you'd hang up the phone. You think the guy's nuts.
Well, tell me. That's why, Mr. Rogers, that's why we have you here. Just give me the highest bean price that you can fathom.
Well, you picked beans making all-time highs. I don't like to jump into something making all-time highs, but if you look at something like sugar, it's down 70% from its all-time high, Rich. That's astonishing.
I love that. I love that trade.
Do you know anything is 70% below where it was 38 years ago? I mean, it's astonishing how high some of these things are going. Sugar could triple and still be below its all-time high. So, I mean, there's some amazing opportunities in agriculture. I'm not smart enough to tell you what they are on a short-term basis, but I'd rather buy the ones that are down. Beans are making all-time highs. Sugar is 70% below its all-time high. I like to buy low and sell high.
Mr. Rogers.
I like it.
Mr. Rogers,
right,
Anthony.
Let me jump in for a second. 1 second, Grizz. We'll get back to you. We just spoke with Marc Faber about the global economy, Mr. Rogers. He painted a pretty sorry picture. He's still on the line. He wants to jump in and ask a question. Marc, you still there? What's your question?
Yeah.
Go ahead.
I beg your pardon?
Go ahead. You're on with Jim. You're on with me and the traders.
So I'm supposed to ask a question. Okay, I'll ask a question.
Go ahead.
Mr. Jimmy Rogers has been so bullish about China for years and years and years. What is he saying about the Shanghai Stock Exchange Index, which was at 6,100 in 2007 and is now at 2,086? I mean, if you ask for value, maybe there might be some value in China. But I'm just wondering, how do you explain your bullishness about China and the poor performance of stocks?
Well, I'd be very happy to. But first of all, Mark, it's the middle of the night there. You at the disco? Where are you?
He stayed up for Futures Now because that's what a great show it is.
Mark, I'm bullish on China. China's going to be the next great country in the world. I was violently and vehemently telling people not to buy China when it was going up in 2007. I only buy China when it collapses. I bought China 3 times in my life, one in 1999, one in 2005, and the third time was in November of 2008. This is public record. Everybody can look it up. They know that. So my view of China, though, when I'm bullish on China, is that China is going to be the next great country in the world. I know you think Russia is going to be the next great country in the world. I happen to think China is. My children speak Chinese, et cetera, but that does not mean that people should rush out and buy Chinese shares. There's a huge difference in saying that China is going to be the greatest country in the 21st century and saying that you should buy Chinese stocks. I own Chinese stocks, yes. And if they collapse, Mark, I promise you I will buy more Chinese stocks. I buy them for my daughters. I put them aside. My daughters don't even know they own them. Someday, I hope they're going to say, gosh, that old man was a smart guy.
Jim, I want to jump in here because it's pretty unique to be able to have you and Mark on the line at the same time. I want you to ask Mark an opinion because obviously, a question rather, because obviously he's very opinionated and he's very bearish on this market. So what would you ask him?
Well, I'm bearish too. No, but I was in Bangkok last night myself. But Mark, I didn't see you at the disco. Which disco did you go to?
Well, I go to lower class discos.
Well, I go to the lowest class of all. I mean, they wouldn't even let me in. I'm too high class for some of these places. Well, I don't really have any question. I happen to agree with Mark about many things. Mark thinks that people should buy stocks these days. I'm short stocks. As I said, I'm long commodities, I'm long currencies, and I'm short stocks.
All right.
No, actually,
so overall, aside from
I have to correct this statement.
Go ahead, Mark.
4 months ago, I turned quite positive about some European markets like Portugal, Spain, Italy, France, Greece, because they were at the 2009 lows or even lower. But I'm not buying right now shares. As I told you in the earlier discussion, I'm rather lightening up on positions. I don't want to own no shares because in a money printing environment, you don't know how far the money printing will go. And it can flow into stocks, or I also own gold and I own real estate. But basically, in general, I think much of the asset bubble has been discounted by investors.
But Mark, how can you say that? Because I'm watching the markets every day. I happen to agree with you. I'm watching the markets, though, and they continue to rally every day. So how can you say that
but not every stock is rallying and not every market is rallying. A lot of stocks have peaked out. Say, as an example, Apple seems to have peaked out.
Like
Maybe
what?
It will make a new high. But I'm just saying a lot of stocks are already in downtrends, and a lot of stocks have declined last year by 40%. Say coal stocks were all down 40-50% from their highs.
All right, well, Mark, talk to me about a stock like Apple, for example. We've watched Apple have a huge run. Is that one of the stocks that you think is peaked out? Because that's one that I think just when it can't go any higher, it does.
I think it has peaked out, but say I wouldn't necessarily short it because, as I said, in a money printing environment, you never know. But in general, concept-wise, and optimism of investors and the headlines, and everybody is an Apple fan, and everybody needs an Apple device on his knees. I think, probably the stock has peaked out.
All right, well, let's hold that thought for a second and talk about the money printing environment. Jim, given the situation, what we've seen, QE3 with Bernanke, and now he's sort of taking a position that we're going to keep printing money until we bring this unemployment number down. What would your take be, depending on what happens with the presidential election? If we get Romney in the White House, are we going to back off that a little bit?
It doesn't matter, Jackie, whether it's Romney or Obama. They're both the same. They don't have a clue what's going on. They cause the problems. These are the guys that got us into this situation.
Right. Okay.
You think they're going to get us out? And Mr. Bernanke is certainly not going to get us out, for God's sakes. But he is going to print money. He is printing money, and the risk. I'm short. Mark's not, but the risk, as Mark points out, is if they print a lot of money, I mean, why can't the Dow go to 20,000, 30,000?
Right.
The money's not worth anything, but it could kill me on my shorts because.
Absolutely. Well, that's a view.
But hey, let me quickly say one thing.
Sure.
If they continue to print that money and the Dow does go to 30,000, I assure you gold and a lot of other things are going to skyrocket as well. So hopefully my longs will make up for it.
Yes.
I would have to worry, though, Mark, that about real estate, because if they print that much money, eventually the bond market's going to collapse. Interest rates will go through the roof, and real estate's going to suffer, isn't it?
Well, I agree with Jimmy on the fact that both presidents are clueless. The only one that had any clue at the conventions was Clint Eastwood. Yes.
You're one of the only people to say that.
He's the only one who had an idea about the real world. The other ones are just clueless.
All right, guys.
And the Teflon, on top of that, they're not only clueless, but they are also completely artificial. No genuine act behind them.
Well, you worry a lot with politicians that that's the case. But, of course, you guys, I could let this conversation go on and on to have you
wait,
two.
Jackie, you got to stop for a minute. It's worse than clueless, Mark, because they think they know what they're doing, and so they're dangerous. If they were just clueless and looked out the window all day, we wouldn't have a problem. But they think they have the solutions, and their solutions, unfortunately, are what's making the situation worse.
That's
Clueless
precisely the point.
and
it's very
dangerous
to have ignorant people believing that they know something.
All right, fair enough, guys. Clueless and dangerous. We'll end on that note. Again, great to have you both on together. That was a first ever on CNBC, the investment equivalent of Elvis and Sinatra together on the same stage if they were alive.
That's
you
a
guys,
great analogy.
Thank you, guys.
That was wild.
That was fantastic. I loved it.
Our thanks to legendary investors Jim Rogers and Marc Faber. But in the meantime, Rich, we always have to bring it back to the trade. We have to make some money. What's the trade?
Well, listen, I'm going to step into the soybeans on this trade. We're substantially off the yearly highs. As farmers get the beans to the market, that drops the price. We've, in fact, dropped almost a couple of bucks or more from the high. So basically, oversold conditions. I want to go the other way with it. We've also had some bullish export numbers today, and the technicals are shaping up. So I'm getting long soybeans in November at $15.40, and I'm placing a stop below that $15 level. There's a natural stop point there. I'm risking 40 cents there, or $2,000. And on the upside, I'm looking at $16.20, so I'm trying to double that and make $4,000. So I like this trade. It's a little bit counter trend right now, but I think we've got a great support level for us at $15.
Well, you know what, Rich? Both those guests just said you got to look for value, and you just found it, so I like the trade myself. I think you're right about this. You buy that correction in the market. The stocks are at very low levels right now. It could start heading higher in the spring, so I do like it myself.
All right, so we both agree we like soybeans. Let me break that trade down for you in terms of the risk reward. Rich is buying soybeans. He's hoping for a move up to $16.20, but he's putting in a stop at $15. For those keeping score online, he's risking $2,000 to make a potential of $4,000. That means that every point move in soybeans is worth $50. Soy vey, who knew they were so expensive? All right, guys. Bad joke by Jackie, but that's going to do it for a wild Futures Now today. That was crazy. I'm Jackie DeAngelis. If you missed any portion of the show, just relax. We are on demand. All the clips can be found at futuresnow.cnbc.com. And of course, while you're there, check out our Futures Now tutorials. They break down the basics of futures trading. They're very cool to watch. The traders are lots of fun. Plus, you'll find our trader blogs as well. So do check us out. Bookmark us if you will. Plus, our guys are going to be blogging and tweeting about tomorrow's jobs report, so make sure you tune in for that. And don't forget, like us on Facebook, follow us on Twitter @Jackie DeAngelis. We'll see you for our next live broadcast Tuesday, 1 p.m. right here, futuresnow.cnbc.com. It was a great week. We had Faber, we had the JetBlue CEO, we had Jim Rogers. Who's going to join us on Tuesday? You got to log in to find out. We'll all be there. See you then.